Heidi ho, everyone. Thank you, Marlon, and welcome aboard. It is Thursday, the what? 18th, 19th. Have I missed a day? It's the 18th somewhere. Not here, but it's the 19th of May, a bit over halfway through. And we've got about, 12, 13 days left in the season. Wonder how long we've got left in the bear market, in equities. It's an interesting one, I've got to say. And I'm bursting with energy trying to get into that move. I wish I were, to be honest, but not my thing really. So I'm a bit of a novice at this. I will be looking. G'day, Lewis. G'day, Paul P. I will be looking as hard as I possibly can for a way into these big shorts, because I think up there, charts are telling me the same, that this has got a fair way to go. We shall see. Righto, let's start the ball rolling and have a look at the pound chart, just for kicks, because really we haven't found any way to trade this profitably in the recent past, due, I think, mainly in part to this sort of stuff going on at the wrong time. Had you been trading on Monday, you would have had to risk 140 plus, let's say 750 pips you would have had to risk. And to get TP1, you would have managed that. And that's it, the end. And then it comes crashing down again. You'd probably still be in the trade, but that's the nature of the beast at the moment. Up she goes, down she comes. Of course, gravity has a lot to do with that, but so does the current market fear, tentativeness. All of those things combined, I think, is leading us to a very, very difficult market to trade from a currency point of view. I think if you're trading indices, you've probably got a far better show of getting some good results. That is on the bigger time frames. On the smaller time frames, I think the currency market still has plenty to offer, and in particular, if you can catch movements like that, happy days. Today, it looks as though this may have turned over. Well, from the previous move anyway. Triple top, lower low, lower high, lower low, lower high, bouncing off the daily pivot. Looks as though it wants to go in search of the weekly, in my humble opinion. Can I trade that? Well, I see no reason why I can't. This candle's interesting. If it were to be a low test bar, 23 pips into about 9. It's not fantastic in terms of risk to reward to the first support level. But, and of course, the best way to trade this short, as always, is off resistance, not off support. So up here, false break, retest. That would be the plan I have for pound US dollar this very day. US dollar, let's talk about the US dollar. Boy, is it in an interesting frame of mind. We've been looking at this area quite consistently over the past 2 or 3 weeks and suggesting that it is a strong level and that the dollar will struggle to get through it. This is the dollar index I'm looking at, by the way. So far, that has proved to be the case. It looked as though, for all intents and purposes, they'd shot through here, but I don't think we need to be fooled by that, to be fair, because of this level. It is so, so strong. And this is a monthly chart now I'm looking at. If you go back in time, that's about as far as I can go, I think, yeah. If you go back in time, it is historically a level that the market respects as well. And I see no reason, unless there's something magnanimous happening, and I guess you could probably say there is, because we've got something called COVID. We've got something that's, while the equity markets are crashing, we've got all sorts of things going on around the world. We've got a war forcing the market into a little bit of indecision, and you name it, it's there. We've got inflation going out of control, which should tend to push the dollar higher, and I grant that. So therefore, there probably is a case for this level to break. You can see, however, that's taking a long time. And I would expect that we'll get a deep retracement before we go any further. But that's me. That's the way I think. I can see a false break already set up there off that level, which is 103.50 as I've got it. And I do expect price will come down here at some stage. But gee whiz, tough to trade because of that momentum and all of those things that I've just mentioned from a fundamental point of view. How do you pin the dollar down at the moment? Well, to me, it's a trash currency waiting to fall out the sky. But at this point in time, it's still a reserve currency, and for that reason, you would think inflation is going to push it higher. That's fundamentals, not charts. Charts are telling me something completely different at the moment. And I'm only really talking short term here. I'm only talking a pullback maybe to the monthly pivot. But if you can get into that, and you know, I'm pretty tempted at the moment, seeing a few things, not necessarily against the dollar, that look pretty much exactly like that. Look like false breaks coming off the top. Can I remember one to show you? Is a good question. It's not the euro, I don't believe, because that's way down the bottom, but it's the reverse, of course. And this is exactly a reflection of the dollar index, looking at it upside down. Are we going to see that false break play out of this level, which is what, 104.5-ish, roughly, something like that? And there's reason to believe, in my humble opinion, once again, that this level, and of course, no surprise, it's an upside down version of what we've just looked at. You could totally see price coming back to that level, or I could totally see price coming back to that level. We're at the bottom of a range. We're trying to bounce off it, but gee whiz, it's a hard task, as I say, against the fundamentals, against all the fundamentals in the case of the euro. But, you know, the charts don't lie. And eventually, I think we'll see exactly what I'm thinking. I do have a few positions that I'm trying to take. If you want to have a look, one is Aussie Yen. This is just a classic. Didn't I say I was going to sack Aussie Yen again? I think I did. But here I am. Here we go again. This is a classic risk-off play. And this is one of those false breaks that I was speaking about. We've broken through this trade line. We have smashed back through yesterday's daily pivot, the weekly pivot, and underneath that trade line. We've retested that. But the market, instead of going the way I anticipated that it might, went straight back up to this support level, this resistance level, which is about 90.50. Now it's trying to come off it. The play is still there, but it's nowhere near as good as it was, because it's asking the market to do a whole lot here. You've got to come from that high now, go through the pivots, through the former resistance trade line, and then on with the job. So I'm not as comfortable as I was earlier with that one, but I'm still leaving it there because this high hasn't been taken out, which is where my stop loss is. If you wanted to follow it, the entry level is 88.94, and I've got a stop loss 227 pips above that, whatever that is. And the reason I'm taking such a big risk in terms of pips is because I think there is potentially, if we enter there, we've got about that bit more, about 300 pips before we hit resistance. So that's better than 1-to-1. And, you know, there's a whole bunch of levels down here, but ultimately, if this were to reverse and the market does, in fact, go completely risk off, this could fall out of the sky. And for that reason, I think that little scenario that we've got there, that risk is worth taking. It's also, if you have a look at this, the daily chart, a good representation of a head and shoulders. If that's the neckline, we've broken it, we've retested it, and we look to be back on the way down. And again, if that is a head and shoulders and the reversal plays out, guess where we're headed? Well, there's a few versions of where we're headed. One of them would suggest that we go from there to the neckline and extend that down to here. If that were the case, it probably lines up with that level, and that makes sense. and you're looking at 500 odd pips. So you're better than 2 to 1 to get to that level. And I think that's on. If it extends further than that, then happy days, you're way down here. So that's why I'm happy to take the position that I have. And hopefully we will get a result out of that. Second position I've taken, or I have in the markets, is dollar CAD, which was, again, going back to, if I can find the blasted thing, where is it? US dollar CAD. There, right next door. This is, again, this classic false break scenario, and this is very much representative of the dollar index chart again, where we have had a break of resistance. That resistance level is support here, resistance here, support here, and big resistance over here. So it's a level that the market respects. That massive double top that's sitting there is screaming out for a lower high. If this is it, then again, we're going to be in a very, very strong position to take full advantage of a reversal. And if that reversal takes place, and believe me, one day, I hate saying that, believe me, it's like I tell lies all the time. I try not to, I can promise you. I believe that one day this will be the case. Now, whether it's today, next year, 10 years' time, when we haven't got currencies anyway, maybe, I think this is on. So at some stage, I think we're below the $1 mark here on dollar CAD. And if now's the time, let's be in. That's what I say. So for the small risk that we're taking in terms of percentage of your account, then I think it's well worth the scenario. The other one, for the very first time in my entire life, I'm trying to short the Aussie 200. And the reason I want to short the Aussie 200 is because I think there's a whole lot left. What happened yesterday or overnight in the States, I think is not over. So interestingly, the Aussie market did not react to as it it did at the time, I suppose, overnight, but nothing today. You would have thought it might have followed the S&P 500. It didn't, but it does give me an insurance bar, and for that reason, I'm happy to trade underneath that. And if I'm wrong, per chance, the market should just go in that direction, coming off that little bear flag there. Looks okay to me. So I'm short Aussie 200 at 7,011 with a stop loss 100 pips above that. And I just leave that run. I don't think I'll take any profit off that at all. Might move my stops to entry at some stage. Let's have a look at the euro before we bring Ash in. Where is my old mate, the euro? I think I need a new pair of glasses. There we go. 30-minute chart. We didn't have a look at that, did we? Yeah, look, similar to the pound, of course, where it's setting up to go short, coming off the top, lower low, lower high, looking for a lower low at the moment, are we not? And again, we look like we might have a false break setting up. What I don't like about this one is you'd be trading straight into the low of the day, and that's something that I don't like to do. So maybe we can get lucky and price goes back up there before it ducks back under and we can go short. Am I willing to go long? Well, yeah, because of the dollar index scenario, but I'm not keen. Let me put it that way. I'm totally not keen to go long. Maybe a little inverted head and shoulders happening there. We'll see. So yeah, I'm sidelined on the euro, and those other three I think are maybe not chances today, but if they can develop, and I'll be continuing to watch them, if they can develop, then I think there's some nice rewards there available to us. We shall see. Hello, Ash.
Oh, good morning, mate. Good morning.
You were going to sleep, weren't you? Listening to my monotonous voice.
I was interested in your analysis, actually, and you know, in just about everything you said, I couldn't agree more. I've just taken a little long in the FTSE, and this is a dangerous one, really. My thinking is probably going to be very different to everybody else because I've got some insurance here. So what I did overnight yesterday was take a short up here. So I've shorted it a couple of times here. One as it popped back, there was a little trend line here. So when it popped up here, I took the short, and then when it popped up here, I took another short. So it's coming down. And it looks weak. And to be honest, I think your analysis is absolutely right. I think we're aiming for this weekly pivot, but I've just seen maybe just some strength coming in here, just a little bit that it might hold on. So I've taken what would be a dangerous long if it was in isolation, but because of the position I've got on the short side, I'm protected. So I'm just looking for a little pop up to this area, and then I'll take the long position off.
I don't know who to believe anymore.
Is that Gary? We could,
I don't know, mate. It wasn't me.
There we go. I've just muted. That's okay. So I've just taken the long position on there. But as I say, if it comes down here, basically trade over. I'm not going to hold on to the long and all the shorts. I'll just close both positions. It was a decent run to this point. Yes, there's another. Looks like another 1% that is on offer here. Which I think we'll get there, but as I say, wonder whether we might get a little bounce first. So I'll see how that matures. But if it breaks down this level, then I'll just close the position in its entirety, and then just take the profit on the gap between the two. The dollar situation that you're talking about, I couldn't agree more, mate. And I took some positions in gold, which is probably against my better judgment in many respects, because we are seeing those bond yields that continue to push. But if you look at the bond yield price, near 3%, that's the highest it's been in over 5 years. So like you, I think we are at dangerous levels for both the dollar and bond yields as well. And I think that we probably could see some downside. Now, I don't know what's going to trigger it, just as you've said. But I think gold is one of the ones that I've kind of wanted to express that opinion with. So I've taken the long in gold. I don't know whether it's going to hold here. I think when it comes down to gold, because we are at a level of support here, it looks like we could get a bounce, and this is the potential bounce point currently where the monthly pivot sits. Now, it'll only be the monthly pivot if we get there this month. It's going to change again next month. So, but the price point is around about 1917. So I'm looking for around about $100 move. A $10 move in $100 move in gold. So we'll see if that pops up there. If it drops down again, then I'll be taking another position. And the reason for that is because of my opinion that is equal to yours, that I think the dollar's going to eventually have to come down. And I think gold's a decent way to express that. And one of the reasons is, if I look at the gold chart on the weekly, it's on support. If I look at it on the monthly, we're in an uptrend. We're on support in an uptrend. So this is still valid. If we look at this over the long term, which we are looking at, we talked about it on Monday. Short-term positions are a little bit trickier, but the longer-term ones, if you can get in something and hold on to it, then you could do well in this market. So I'm really looking at this as a long-term position, and I'll probably continue to trade this long right the way down, maybe to there, maybe I don't know. Yeah, that looks like a good point there, doesn't it? So in this area here, 1350, I'll continue to trade it long right the way down to 1350 and see if we can get the bounce that I think is coming. But it's difficult. It's very difficult to know if it's going to bounce here. But it is at support, as I say, mate. The double top, as we've talked about, has pushed the gold price down. But this is an area. Yeah. This area back in 2011 is the previous high close, and that's where we are. This is a very, very strong level. So I think this is worth a punt at this particular point. And of course, the best way to play it is see if we get the bounce initially, get those stops to break even, and then effectively ignore it. If that's possible to do, just get it on, leave the position and ignore it. then it would be amazing. Because the problem with all this stuff is that you don't know how it's going to play on your psychology. Gold pops up and you're making $500 in who knows, maybe a couple of days. Then the compulsion will be to close the position. But actually, if you think that there's going to be an overall collapse, that isn't the kind of correct way of expressing your opinion. So really, what I want to do, and we'll see where we are either in a week or in a year, mate. What I really want to do is if I can hold this position right the way up to right the way up to these highs, see where we're at. And if we can get beyond those highs, then who knows? Maybe 3,000, maybe 5,000 dollars an ounce. Then that would be amazing. I mean, I don't know if we're going to get to 10,000.
Okay.
Yeah, I mean that would just be a really nice one. The one thing about it, the one thing that is in my favor is that I don't trade gold. I'm not really. Every now and again, I'll take a position in gold or silver or the pound. Or some other currency, but it's not really that's not the way that's not my bread and butter. The way I make money is from the FTSE. So the one positive thing that I'm telling myself and the possible reason that I could make it is that it will be free either way, because it's not sort of something that should be on my radar really. It's just that I've been talking about gold for a long time, as you know. And I just really want it in the portfolio. I've got Bitcoin and other things, but I do want gold in the portfolio.
Yep.
I'm not that keen on Pax Gold at the minute, just because of the way that the crypto markets are going, and they have had some issues. And even though Pax Gold pays a dividend, and you're not going to get any dividend from this is one other way that I can play the movement, without having to buy an ETF or buy, other things. I have actually got some silver mining stocks as well, which is also expressing it. But I just like to see whether this is going to play out, mate, and just leave things alone. I don't.
Yeah, look, that double top that I keep harping about, it's there, but I can't trade it until the neckline breaks. If the neckline breaks, gold is 1250, I reckon.
Down this neckline here.
Yeah.
Yeah.
But it hasn't. So, I'm totally with you on why you'd want to go long.
Yeah, well, I mean, if we think about it as well, in some respects, the gold price has to recover this month. Otherwise, this is going to start looking like a tower top, which is very similar to the evening star, but it's got an extra bar here. So it would look like a tower top, which is a negative signal when you basically take out 2/3 of the bar that was bullish. So this has to close up or nearer the 50% and higher mark for it to not look bearish. But if you look at gold across the board, this is gold against the Aussie, still in an uptrend. This is on a monthly chart still. This is gold against the Swissy, still in an uptrend, and actually still holding the previous high back in 2020. This is gold against the pound, still in an uptrend. I mean, this actually looks worse in a way that it suggests it's coming down to this point here, but it's still pretty bullish. The outlook on gold still looks pretty good to me. So I am willing to have the position, and I'm willing to see what happens now.
Yeah, look, I really can't have my cake and eat it too. And if I'm expecting the dollar to tumble, which I am, I've got no idea when or what causes it, but maybe the world just wakes up to the fact that they outprinted themselves this time. I don't know, but I can't have it both ways. If the dollar crashes, gold won't.
No, well, this is it. Do you know what? I mean, what you're saying about the world wakes up. I mean, I think the world probably has already woken up, but I think the thing with it is that until the numbers really start to look ugly, then people probably, there's a pretty nice line there. Then people probably will continue to buy the dollar, or at least hold it up where it is, because Jerome Powell has effectively said we are going to raise rates until it breaks, and the raising of interest rates will boost the dollar, of course. But when it starts to look like it's breaking, that will probably bring the dollar down, because the assumption will be that the central banks will have to do a pretty sharp reverse, or at least hold position. yesterday, I don't know if you saw what happened overnight, but earnings from Target, half their revenue. So when they released their first quarter targets, half of their revenue. And also, who was the other one? There was another retailer that posted yesterday, pretty bad numbers. And these are Target is a retail company, so that means that they are probably more exposed to the inflation data than some other industries, and that would suggest that the consumer is getting squeezed now in the numbers as well. We know about consumer price index, but if the consumer isn't going out and buying retail stocks, then that's really retail products. That really could be the first indication from a stock that we needed to kind of get for the potential move that everybody's expecting. And as you said, mate, there's an equity crash on. There's a recession coming, and it's just a case of when, not if.
Yeah, it's not a pretty outlook, is it? I've got to say.
No, it really isn't. It isn't a pretty outlook at all. But the markets aren't holding up very well now. They have started to come down. So I think that FTSE trade that I've got on may well end up being a close, but it's okay because of the gap. But I think that the FTSE really and the Nasdaq and the like, I think they've got a potential 20% drop still to come, and it's just what if or when that happens, really.
Yep, 100% with you. And Lewis, do you really want me to look at Dollar Yen? I will. I'm okay. You got Dollar Yen chart, mate?
Well done, John. Yes. Let me just plug this in.
Didn't get into the Nasdaq. Yeah, what a shame.
It's starting to fade. Dollar Yen, let's have a look.
My pet bear, all right. It's pet like a bloody alligator.
There's your Dollar Yen. On support.
It is on support. I've got a trend line coming up through there as well, which really effectively is a neckline. And that would be my opinion, Lewis. If that breaks, and the monthly pivot's bang on it as well.
Not
and
there?
She's got that there.
Yeah, weekly pivot. That's weekly pivot there.
I've got a monthly pivot, haven't I?
Yeah, I mean, sometimes you look at these brokers and they have completely different prices. And somebody was asking where these prices are generated from. Well, I'm sure there's some sort of central body. The thing with it is that whichever one you go with, you should trade and sort of and stick with, because the patterns are the same pretty much. It's just that some of the ways that the numbers are calculated are very different.
But I mean, the trade there for me, I better share my chart, mate, because it's completely different to yours.
Okay.
And I'll show you why.
Is this are you on the dailies? That's the Dollar Yen daily.
Oh, I'm on the daily. Yep.
Oh, okay.
I've got a control panel problem here. Hang on 2 seconds. Oh my God. This thing drives me nuts at times.
Yeah. That's Zoom, isn't it?
Yeah, I still can't do it.
Or maybe I can stop sharing. There you go. See if that helps you.
No. I just completely lost the ability to do anything.
Let me do that. Marlon's the host. Marlon, can you help Jeff out?
Don't think so. My normal control panel just isn't existing.
Okay, let me take back the screen, mate, and we'll see if you can figure it out. What have you got it on? A small screen at the minute?
Here we go. No, yep. Now I'm okay. I've had to go in via another method.
There you go.
So here's my chart, and there's the monthly pivot I spoke about. I'll go a bit tighter so you can see it. I mean, we know what's happened all the way down here. We don't need to have a look at that.
It's funny actually, mate, because the price points look exactly the same. 128.30. Yeah, I mean, I've got the same price point and the same pattern. It's just you got a monthly pivot rather than a
Yeah.
Which is odd. Actually. How is that possible?
But the real key here to this was this one here. I mean, it's a terrible, terrible candle. It's a spinning top and the second one in a row. But at the end of the day, it was a potential to be a lower high off a resistance level, a little bit higher than the left shoulder, but it was completely after a double top. So, there was your entry. But now I can't enter until this breaks, this being the neckline. If this breaks and then we come back here, then I'm all over it. But until that happens, same as gold. I can't get into it. Now it's too late. I can't get into it until it breaks or goes back and gives me another lower high off these double tops. So do I see this falling? Yeah, but it's the same as the dollar index, really, and the same as the euro going up. They're all the same trade, and I think just about everything on the board at the moment is the same trade. If you think about it, it's all about what's happening from a fundamental perspective. So, and that's no surprise that everything's the same because we're all in the same relative position to each other. There are a few of the miners, of course, are a little bit different. But as far as this is concerned, I'm stuck where I am. But this was the entry here underneath that bar for sure. Wish I did, but I didn't. And that's very, very similar to what's set up on a few of these pairs. Aussie Yen was one of them where it's broken. Well, this one has broken the neckline, come back and tested it. That's what you look for. I mean, that's what I look for all the time. This one reversed, double top, looking for a lower high. Maybe we've got it. They're all similar, very, very, very similar. Euro Swissy, we've missed that one too.
Yeah.
So
I'll just check my monthly pivot, mate. Mine is definitely wrong.
Okay.
Yeah.
What breaker are you on?
Axie,
right.
Mm.
What am I on? Fusion.
Yeah.
That's probably why. So this one is the weekly pivot for you, right?
Yeah.
Interesting.
Yeah.
Could be the start of something big, guys. I know I don't, but I know the wave rider strategy looks at where the weekly pivot's going, doesn't it? Does daily wave rider look at that?
Yes. Yeah, it does.
So it wouldn't probably trade the first drop, but if it dropped again.
No, you know what? Because the longer term trend in this one is pretty solid to the upside. It would take quite a while for the wave ride to kick in now.
Okay, so it has to establish a new trend first. Yep.
Yeah,
okay,
it's got to establish a 20-day trend to the downside before it would start using the weekly pivot for short-term moves. So
cool.
Yeah, so it's not well, it won't be sort of something that people will be able to take advantage of on that. But it's one of those things that you might want to look at a different currency. What's that? The euro dollar, euro yen, is it?
Euro yen, yes.
Yeah, and I suppose that's the thing. If you're looking across the board now, you're looking at other things against the yen, not the dollar. Things like the euro,
completely.
things like the pound, probably.
They're starting to buy yen by the look of it.
Well, I mean, the kind of fear is kicking in, isn't it? So, with that happening, it's not a major surprise.
Yeah, it's happening now. They're buying it. They're buying it now.
Mm.
Oh well, maybe that Aussie yen might get into action at some stage. We'll see. 1:30. Should we ask a few questions of the quizmaster?
Well, I think we should. Yeah, I think we should.
Should the quizmaster ask a few questions of us as we go into the Thursday Theatre of Thoughtfulness? It's very, very warm welcome to Jovial John. G'day, mate.
Good day. It's all good. It's all good.
Is it? That's good.
If I could make a little bit of a profit during the day, I'm okay.
You managed to get into the FTSE trade, John.
I have been on the FTSE short side and taking it out and putting my bits in, wait until it goes up and down for the last month and a half.
Oh, that's
don't
really
take-
good, mate.
I take a small position and I get my money and I get out. I mean, I'm on now. It's good. And
Yeah.
I
don't think you'll go too far wrong with that in the next couple of months, mate.
No, it looks ugly.
Some of the currencies, I did quite well with the pound for a while. Then that's dropped out. So I thought, okay, wait till next week, learn some more stuff, and then
Mate, I think that's really interesting that you actually just pick a product and trade that for a month or so. I think it's a really interesting approach, because actually there's no reason to be going around looking for lots and lots of things. You basically want to you want to trade what's trending. You want to trade what's hot.
I wasn't learning it. Well, I was learning. That's wrong. I was learning things, but I thought, stop being, stop chasing the money. Learn what's going on, and you'll stand a better chance.
Yeah, I think that's fair. I mean, if you think of the Nasdaq, if you traded just the Nasdaq, really up until this point, up until December, the whole of last year, just the Nasdaq, you'd have made some really good money. Now you flip it around and say, okay, actually I could just trade the Nasdaq short, but there's not, or you go copper. You take the copper chart short. You don't have to have that many products. You just have to have the ones that are working. And I think there's a lot to be said for that. Trying to sort of pick a basket of products.
Yeah, recognition of what's working is the key, isn't it? And John, that's exactly what you spoke about. Yeah, learn how to recognise what's going on.
Yeah. What's the weakest, what's the strongest, and just trade that all the time. Until they flip positions, which is where I think the dollar becomes quite interesting, because it's obviously the strongest, because we're seeing okay numbers are up until this point, pretty good numbers actually up until this point from the US economy, and you've got a Federal Reserve who are hiking interest rates, but that may be about to change. Now we've seen what's happened with it's the yen today.
That's month to date. That's month to date.
Month to date. Okay, so the yen has been the outperformer
for 19 days. Yes.
Wow.
Or
okay.
18 days.
Interesting. I mean, I suppose that does express the concern in the markets, and I guess that's the thing. What you were just saying about the same trade. If you're a currency trader, if there's concern, you trade the yen long and probably the euro a short. If you're an equity trader, you could do the same with any of the equities, the Nasdaq or the FTSE or anything like that. If you are a commodities trader, then you would probably be looking. I mean, I think it's a really interesting balance between gold and silver, because if you think about what's happening to silver, if there's a recession, then you would think precious metals should do pretty well as a kind of hedge against collapse of people's financial purchasing power. But also, if there's a recession, then industrial production will reduce. So that would suggest that silver won't do quite as well as gold. So you might even sort of like look at that as a potential hedge trade, a spread trade between gold and silver.
My favorite currency is this one.
What's that? The CAD. You like the CAD?
Yeah. Well, look, it's commodities currency, right? Or commodity currency. The other two commodity currencies are down here.
Yeah.
So by far and away, this is the strongest of them, by far and away. So yeah, I'd be looking to stick with that for the time being.
Yeah, I mean, I think that's because the CAD is an oil exporter, where the Aussie particularly is more kind of iron ore. So if there is a collapse in global economies, then there will, again, there's going to be less building being done, which is not very good for the Aussie. But because of what's going on with Ukraine, there is a reduction. Now, obviously, oil is going to potentially come down in price with a lack of demand as well if there is this recession. But because of the geopolitical situation, then the Canadian dollar really should outperform the Aussie because of the commodity that it is, it has in its basket. And I suppose that's the thing, isn't it, mate? You put these things into categories, but then you break down the categories. Well, which commodities, do these guys produce,
yes.
and which are likely to do well and which are likely to fall? Yeah. So you just sort of like get your detail. But yeah,
you've also got to remember with the Aussie at the moment, which is part of the reason I'm happy to be short Aussie yen, is that we've got potential, and the polls are saying it in big numbers. We've got a potential change of government this weekend,
right?
And if that happens, the market won't like that at all.
Yeah,
not because it's a change of government, but again, that does add a bit of uncertainty. But because it's going from a Conservative government to a Labor government, I don't think the market's going to like that at all.
Yeah,
and same for the Aussie 200. I think it's the same story.
Yeah,
we shall see.
Yeah, gold. Sorry, Lewis is saying that he's trading one metal and one index, which I think is a really, really wise thing to do. You become a lot more kind of expert as well when you only have to focus on a couple of products.
100%. Yeah, 100%. Yep.
Really good. Well done, Lewis. That's really good.
Did we get sidetracked, John, or not?
Yeah, that was my fault.
That's okay. It's look, I think that's what the show's all about. If there's something to talk about, you talk about it.
Oh, there's loads. Especially you got my favourite go-to chart up in the morning. FinViz.
Oh, FinViz.
I kick it off every day. That's always up on one of my things. I call that the high-speed tennis match. Can you remember that game where the video game where you hit a ball across one side and then the other?
Yes.
Yeah, that's what I call that, and that's what I watch that constantly throughout the day to see who's on top.
Actually, this is a pretty good tool. If you're into indices, you can list any group of stock. You can whatever you want. You can list it there and save it as whatever you want it. Save it as list every stock. I think I'm not sure about how many exchanges, but if you're into stocks, this is a really good free tool.
It's very, very good, isn't it? I mean, it's pretty in depth considering it is free. I remember seeing Gordon Scott using FinViz actually to screen some of his stocks.
Okay. Yep.
Some of his stocks, and he may well be a subscriber, but the fact he chose FinViz, I think, was quite telling in a lot of ways.
Interesting.
Okay. Right.
But yeah, I don't use it all the time, but if I see something unfolding from month to week to day, I think that's worth looking at.
I think it's good.
Righto, John, let's do it.
Okay, I'm going to try and, okay, yeah, I'll do that. And I want to share that. And it does that, which is so annoying. Okay. Is the screen available? Can people see?
Yes, mate.
All right. Yeah, I'll just get my little chat box up in the right place. Okay, kicking it off. What is the following trade pair? Brent pays the rent, Brent smooth, expensive crude, or Brent crude?
I haven't got a chat box, so I can't answer, but I'll answer verbally as soon as everyone else says. It's D for me.
I have to say, John, only because you put all those other ones in, did I know the answer to that?
I thought about. I thought I better start off with something reasonable.
Mine's listed as Brent futures, which makes it a lot easier.
Oh, okay. Some of these might be a bit contentious today. I don't know. Which European car manufacturer just sold some of their plants at a bargain price? And I'm talking bargain price. Yeah,
I'm going to guess at these guys. I don't know
Renault,
this story.
BMW, Peugeot, or Mercedes-Benz. I don't
know either. Some big names too.
They are all European car makers. I haven't gone for any
some of their plants. Okay. Thinking.
I should add that they really didn't have a choice.
Yeah, that's why I've gone for C. I've gone for C only because the other two are way. Well, I mean, it's only BMW and Mercedes are too big. It could only be Renault or Peugeot, I'd have thought.
Oh, I like a bit of. Okay, we're gonna. The answer is Renault. Renault had to get removed there.
They actually got 50-50 and got it wrong.
And went wrong.
Yeah.
$1 ruble.
I went wrong, but not for the same thing.
which one of the following is trying to get a better price by using the very thing that they're trying to purchase?
Ooh.
So,
Cool. That's the wording on that is difficult, John. Let me see that again.
My apologies. Which one of the following well-known entrepreneurs is trying to get trying to get a better price for the by using the very thing that they're trying to purchase? Oh yes, everybody is definitely fingered the collar of the right guy. Elon Musk and his Twitter price driver. It's countrywide election time this coming weekend. For which of the following countries? If you're paying attention to the show, you should get this.
Oh yeah, I wouldn't have known unless Jeff had been.
It's quite important in my part of the world where I live.
Yeah.
Is it? Why so?
Got a lot of Aussies. Aussies live in.
Okay.
In KL. Which one of the following countries is a little bit cold on Finland and Sweden joining NATO? Greece,
I'm liking this quiz.
Germany, Turkey, or Italy?
This rings a bell.
Yeah, one of these countries is. They're not there. They're not making. I don't think they're going to make it easy. They're going to want a bit of a price, I think.
Yeah, they do. They want to. Yeah, they're getting some trying to get the negotiations in, aren't they?
Yeah, and Turkey is the flavor. But talking of flavor, the Big Mac is leaving which of the following countries after 30 years? Canada, France, they wish it would. Germany or Russia?
This is a nice quiz, this one, John.
I thought we'd better have one because it's.
I wouldn't have thought it had been there for 30 years. But there you go.
No, it shows how long the Mac has been around.
Makes me want to go and buy a Big Mac, not because I like Big Macs, but because I think it's a good move.
Okay, this one's a bit. The WHO is questioning what think pandemic? Zero vaccine policy, zero transmission policy, zero booster policy, or zero mask policy. They are questioning one of these things. Now, they've not questioned it before. They're definite. Zero vaccine policy, which means you don't want any vaccines. Zero transmission policy, which means you're trying to eradicate it by some very draconian measures.
The only thing that makes sense to me is that one.
Me too.
I said that this might be a bit. This is to do with Shanghai.
So what was the question again?
This is to. That's it. I told you it would be a bit weird one. The WHO Health Organization is questioning what. They're starting to question.
Questioning what?
Yeah.
Okay. I was thinking they were considering what. I'm going, how the hell would they do that?
No, they're just questioning people.
Gotcha.
They, for argument's sake, they've dropped it here. They like us to wear masks, but they're not. You can wear it inside, not outside. But this strict sort of routine of social distancing has gone from the streets of KL, which is very nice. It means we can travel. Oh, Jeff.
I'm still passing.
We're still passing. Oh, it's good. It's good. Which one of the following semiconductor manufacturers is building it is a brand new plant in the US?
Cool.
Yeah, this is, and it's not, it could be a sign of good things to come, I suppose, if you're living in that part of the world.
Don't know.
Samsung. It's 17 billion US.
All wrong.
The new factory is in Central Texas. The reason that I got that through that question in, there's a lot of Samsung factories in Malaysia. We have a lot of South Korean
So
students.
let's think about that for 2 seconds. What are they actually doing?
They're building a brand new factory to bring back to actually bring the semiconductor manufacturing process back to the US.
Okay, so that's not necessarily a great thing for Samsung. In
No.
fact, it's probably going to be expensive exercise. So I was thinking maybe that's a stock. That's a stock that might go on the radar.
It might do. They're getting a brilliant deal. They're getting so many tax incentives and tax breaks to put it together. Which one of the following subscription-based companies stroke models is starting to make redundancies?
Yeah.
Well, I'm for guessing that.
I know that one.
Disney Plus.
Sorry,
Amazon.
Naresh, I'm answering to you.
And Jeff got some insider trading going again. I love it. Amazon Prime, Netflix, or Apple. There's only one of those. I could be wrong here, but there's only one of those companies that's really going to get chewed up, and that would be Netflix. Everybody else, it's
that's down something like 60% or something, isn't it?
Yeah, it's not good.
It's not doing well.
No, I love a lot of the friends I have in KL. They chopped their Netflix subscription.
So
this is the sorry, mate, go on. So
they've got no way to get out of that either. I wouldn't have thought. I mean, it's just down, down, down.
This is the thing I was going to say, mate. This is the interesting thing about bear markets is that really it should cull lots of companies that are either run very, very badly or weren't good companies in the first place, because lots of companies can make money in a bull market. Lots of companies can do really, really well when the economy is hot. But it's the companies that are good that do well when there's a recession on, which kind of, and that's the thing about free markets, and that's why you sort of want the central banks and the government just to leave things alone, because it would make it a lot easier for stock pickers, because the ones that are left are good companies. Otherwise, they wouldn't have survived. So you can buy shares in that stuff, but when they prop things up, it sort of it gives this impression that a company is well run and a decent company, but actually it doesn't necessarily mean it is the case. So it makes the markets a lot more difficult. They should be a lot more pure. I mean, I thought that was the whole idea of a free market and democracy, really.
Should be.
Yeah, and look, they've just handed people free money in a pandemic where they can't go out the door, which is why Netflix is falsely inflated. A lot of things are falsely inflated, like the stock market, right?
Yeah,
which is why we're seeing it tumble.
And I guess the thing about Netflix is that it was a pandemic trade, and that's now unwinding. Yeah.
Naresh, they're planning to add a zero advertisement subscription. That means the standard ones will get a lot of ads. Don't we get ads? Netflix. Yeah. No, I don't get ads. No, I don't.
No, not yet.
Last question. It's just which UK government consultation closes this Friday? A 3-month consultation on a tax for pets, a 3-month consultation on an online sales tax, a 3-month consultation on tax for growing your own vegetables, or D, a 3-month consultation on tax for growing your own fruit. One of those closes this Friday.
Tell me C and D actually didn't happen, please. Tell me.
No, it's my sense of humor.
Good. Sorry. That leaves A and B, so tax for pets. Okay, we'll go with the one that actually does make sense.
Yeah, sorry.
That's okay. If I'm wrong, I'll shoot you.
No. They closes this Friday. The 3 months of government consultation on an online sales tax. Not quite sure what that will do to companies.
What is an online sale? That on online purchases?
Yes.
So That's from anywhere in the world, right?
I don't know how that works. It's just
Yeah, well,
I'm
see,
just
Australia
amazed
did
at-
that not for 3 months. That it's now a thing. You can't sell into Australia without paying some sort of tax.
Oh, I just think it.
Don't ask me how they police that, mind you, but
No, I don't know.
that's the case. Singapore did as well, eh? Okay,
That's
interesting.
our brain scrambled for the day.
Well done, mate. Thank you
Didn't
very
take you
much.
to scramble mine, mate. I can tell you.
Well, we have got stock market, which is getting absolutely obliterated at this particular moment in time. FTSE 100 is down 7,300 and to 7,300. And when you consider the highs of 7,600, that is a whacking bad number for the FTSE. Nasdaq actually holding on a little bit, which is interesting. I still think the Nasdaq down at around about 10,000, maybe 11,000 would be palatable. I thought what was interesting as well was that Bitcoin has held price pretty well during this most recent dip. We've got Bitcoin at 29,000, so just under 30,000. Ethereum 1948, so just under 2,000. So actually, the crypto market isn't collapsing in the same way. Now, I don't know whether that is going to be some kind of indication that we are near or reaching a bottom, because eventually things will. It doesn't matter how bad things are. There will be a point where the assumption of how bad things are or are going to get will be priced in. And then from there, you're going to start to see some green shoots and people will start buying up again. So I wonder whether it's some sort of indication that there is a bottom nearby. Nasdaq currently at near 12,000, so a possible dip down to 10, possibly down to 8. Yeah, let's have a look. Yeah.
Also, I've been triggered into the Aussie 200. It must be a futures.
No, yeah. It could be futures.
Well, it must be because the market's closed.
Yes. Well, no. It's a kind of. I think it's some sort of derivative of some sort when you look at the Aussie 200.
Okay. Thanks for letting me know, because I had no idea.
Yeah, because they don't. It's not. If you look at any of the products that are on MT4 that are provided by the broker, they all stay open almost 24/7. It's a strange one, really. Currencies, the kind of market that everybody thinks is the only one that you're able to trade around the clock, but actually the way they offer these equities now, it's not quite round the clock, but it's there's only a few hours each day where it's closed. So yeah, Aussie 200 looks pretty good, mate, and it looks like you've got this trend line down here, which looks like a potential. Oh, I don't know, actually, difficult one.
Yeah, there's support there, no question.
So look at the Aussie dollar as well. Yeah, I mean, with the language that we've got from Jerome Powell and everybody else, actually, like the Fed and the Bank of England, with a rhetoric of recession, then you'd expect the Aussie index to do poorly, to maybe catch up with the others. So no great surprise, but I don't know how low it goes.
Well, I've never traded it before, so I'm now officially christened into the Aussie 200.
Yeah, I think it's a good one, mate.
I've got no idea what I'm doing, because obviously I thought it was closed.
Well, this low on the 4 hour looks like many of these other things. I've been looking at the pound CAD recently, and quite surprised in some respects that the pound CAD is holding up. I know we're down at some relatively significant levels down here. There's a decent level of support, but because of what we discussed with Simon on Monday, I thought I'd have a good look at the pound CAD. But I just don't know why the pound would hold up. But if you consider that there could be a recession, then all of a sudden the CAD isn't quite as attractive anymore because of the potential dip in the price of oil, which we are actually seeing today. So maybe the pound CAD almost manages to get a boost because the CAD starts to just weaken off a little bit, and the pound gets a bit of a kickback, because the UK economy is in terrible shape, really. 9% inflation yesterday. I mean, so that's the highest amount in with the majors of the globe. Average earnings actually kicked up a little bit as well, but Brexit is going to be problematic. Now we're really starting to get into the bones of it, and right in the middle of it. There's going to be a storm which is going to last years with Brexit, potentially until the next government comes in and takes us back into Europe.
You mean more years?
Yeah, there's going to be bad. It's going to be bad. And the thing with the Brexit scenario is it's another layer that many of the other parts of the world don't have on top of the layers that all the parts of the world do have. So the EU and the UK are going to be cutting themselves really over the course of the next few years as they try and sort this thing out. As I say, until probably the Labour government comes in. There's a chance that they win the next election. There's always a chance. And if they were to do so, I think that the language about Brexit would change drastically, because Keir Starmer is he's a Euro supporter. So I think he would have a different tact on the way that we kind of interact with Europe. Whether we go back in, I don't know, but I think we'd change our relationship.
Yeah, I actually looked at that daily chart this morning and was considering it, because it's a beautiful slingshot candle pattern there on the daily. And I thought, oh, double bottom, nice slingshot candle pattern on a resistance trend line. Maybe this is going today. But then I thought, no, don't think so. I need to see a higher low first.
Yeah. Pound Aussie as well was another one. This is another one that has looked weak, really. But again, with this bottom coming into play, I guess the assumption that's being made here is that the pound won't necessarily be cut adrift. The UK won't be cut adrift. I think if things are coming down, everything's coming down. So there's no reason to kind of sell the pound off here. But I don't like it. I mean, I wouldn't buy it. I definitely wouldn't buy it. I mean, I know we're on support, but I wouldn't be interested. It's just not a well-run economy. Interesting what you say about Australia's elections, because actually Australia is a relatively well-run economy. 5% inflation there, 9% over here, decent trade balances in Australia. Commodity prices obviously helped it for a while. That looks like it could be changing. So I don't know whether that might have some kind of impact on the price of the Aussie. But I wouldn't trade it against the pound. It should, yeah, it should. But what did you trade it against, mate? I guess the yen.
The yen, that's what I did trade against.
Yeah. I'm not sure what else. When you look at maybe the Sing dollar, possibly. I don't know whether we've got Aussie Sing.
I haven't on this chart on Fusion. I don't know if I've got it on FXCM. Probably do.
It's Aussie Sing. It's already been a bit. See, that's on support as well, and I guess this is now the challenge. We have support for a lot of things, just like we had the challenge with the dollar. A few months ago, dollar was down at these levels of support for a while, and the question is, what was going to make the dollar move to the upside? Well, when you look at the chart was pretty generous. When you kind of look, probably along that line there. The chart was pretty generous. It gave a nice indication there that it was popping out of the. It was giving us an entry on the right shoulder of the inverted head and shoulders. Nobody could have predicted that. Well, maybe some people did, but I couldn't have predicted that was to happen.
Yeah, there's a little bit of sentiment cycle in that too. Not a real good aversion point, but a little bit of it. Certainly the cycle, to my mind, is complete. That big W is done.
Yeah.
And we're at resistance. So, there's a whole lot of reasons to think, from my chart point of view, that this is going down.
Yeah, I agree, mate. And look at the parabolic move as well. These things tend not to hold up for too long, particularly when it's hit a level of...
gravity takes over, doesn't it?
Eventually it does, and we're right on top of it. So you would definitely be looking for dollar shorts at this particular level. I mean, I had a really good look at the bond yield relationship to the dollar earlier on. And what's quite interesting is that they tend to be inverse. But what we've seen over the last few months is that they've correlated. You know, which is I say is unusual, but I think that the reason is because you would tend to see people positioning for what's coming in the future, and now what's happening is people are playing out the present, and they are panicking. You know, some people haven't managed to kind of dump their bonds, so they're just dumping bonds, and the bond yield's starting to fly, and the dollar's flying along with it. So things are likely to change, and the dollar's likely to come back down, maybe even test this level here. At 99, definitely 100 at some point, but it's not coming in yet, and who knows what the catalyst is, and I guess that's the whole thing, isn't it? There's no way when we were looking at the dollar all the way back here, let's put it on a weekly, there's no way when we were looking at the dollar coming down all the way back here that we knew what the catalyst was going to be to drive this market higher. But what we did know that the technicals were saying this is an area of support. And if we flip back to the pound, this is what participants are effectively saying here. I haven't got a clue what is going to drive the pound higher, but this is an area of support. So what I need to do is buy it up and see if things change in my favor and change, which is, again, what I'm doing with gold. I'm effectively saying this is an area of support. I need things to change. I don't know what they are, but what I do know right now is technically I have a level which it's got a potential to bounce from.
Yeah, and look, makes perfect sense. If the dollar drops, gold goes.
Yeah, and the same will be the
completely
case
correlated, of course.
Yeah, same will be the case with the Nasdaq. The Nasdaq will get to a price, and people will be looking for that price to bottom out, and you won't know why it's going to bottom out. And by the time you've realised why, you've missed the best price, but you haven't tried to catch the falling knife. And that's the one thing, isn't it, about waiting for the higher low. You know, when you look at for this with the dollar, there was still little evidence here, but the higher low kind of started to suggest that at least we'd get a run. And then what you're hoping for is that works out. And I think it's always a question between limit order traders and stop loss order traders. The question is the safe money here, or is the safe money here, or I guess at the top of that bar? And stop order traders would say, well, the safe money's at the top of the bar because you've got momentum. But limit order traders would say, well, the safe money's down here because the risk to reward ratio is far greater. So I can enter a lot of these and get a lot of them wrong before my account's down. So I think it's an interesting argument that will rage for time to come, mate.
Well, like I say, I'd love to be one of those people who can do both, and I think there's room for both. You know. Yeah,
very, very true, mate. Yeah,
it's just a matter of controlling your funds.
Yeah, yes, it is,
and getting that risk right.
Yeah, and that's all it's about in the end, isn't it? I mean, you know, when you're sort of thinking about trading, actually, first and foremost, you should be figuring out how you are going to manage your money. If you can manage your money, you can be wrong a lot, but still come out on top.
Yes.
But if you can't, and you've got to be right a lot, then it probably won't matter. Won't matter how many times you're right. If you can't manage your money, you're in trouble. You're done.
Yeah, it's a slow and painful. It's a death by 1,000 cuts at the end of the day.
Yeah,
and that's why I've had to go from I still have that strategy in my pocket, but I've also got one that produces far greater rewards. So I am both those people, I suppose, at the same time, but I still can't get scalping into my repertoire, which I'd like to do, because to me that's a scalp down the bottom.
Down here?
Yeah, entering the market
Yeah.
there is a scalp.
Yeah.
And
we
I'd
could sort of-
love to be able to master it. But, you know, people say you can't pick the bottom and pick the top, and I've always subscribed to that theory. But
yeah, well, I think that's
you can see
relatively
it
true.
generally once it's formed. You can see it, right?
Well, this is the thing, mate. I mean, this is my because I've become a limit order trader, if you like, over the years, and the reason that I do it is that I do have the opinion that that's where the money is for me. You know, that's where I can sort of like I can make the most if I can squeeze out the high, but that doesn't mean that you're not still waiting for signals. You know, when I'm sort of like looking to enter this one short here, I'm looking for, you know, I've drawn this trend line. There, and I'm saying to myself, well, it's coming back in this area here. So, and the same thing along here. When I'm entering here, I mean, I guess this was the same trade in a way. Somewhere along there.
Well, there's a classic example. So your entry is on the shoulder, if you like, on that trend line. And my entry is on the retest of that pivot.
This one.
Yeah.
Yeah. Well, me too. I entered there as well. I mean, I took another short there because for the very same reason that looked to me like an area of resistance. So I'm limit ordering there as well, and coming down. I mean, this one's not so good. I'm going to figure out what to do with this. I'll probably have to close it out, but I might be able to use it. I might be able to use it. We'll see.
All right. We've got to consider next week.
Yeah. So Monday we're not here. Thursday I think we are.
Thursday. Where are you on Thursday? You're still in Singapore, aren't you?
I'll be in Singapore.
Yeah,
are you in Singapore, John? You're in Singapore Thursday. Amazing, mate. Oh, that's pretty good. Okay. Yes, I'll be in Singapore Thursday.
Well, we'll be on air.
Yeah.
On the trading retreat, so we won't be here.
Yeah.
Unless
I think this is
not going to YouTube. No.
Oh, it's not.
No, it's client only thing.
Okay. All right. So no shows next week then, I guess.
No shows next week, guys. You'll be relieved to know that you won't have to look at our faces and listen to our voices for 1 week.
Yeah.
I'm only kidding, of course.
Yeah.
So yeah, sorry about that, but we are tied up next week with company business, and for that reason, there will be no shows. Therefore, we will see you we'll be into June then, won't we? Will we? No, not quite. Not quite.
No.
Not quite.
We'll be in the last week of the month when we come back.
Yeah. Yeah.
So Monday week is our next show.
Yeah.
Is our next Trading Buddy show.
Yeah, we've actually got a few coming up. So yeah, Monday week's the 30th of May, and then the week after that is a bank holiday in the UK.
Goodness me.
Yeah.
We're having lots of breaks.
Yeah.
And we are having a holiday too, aren't we? When's that?
Oh,
we decided on that. We did decide on that.
Yeah, we did decide on that last week of July into the first couple of weeks of August, I think it is. Right.
Cool. Okay. So we'll have a good spell through June anyway and July.
Yeah.
And then we'll have a little bit of a break. Okay.
Take the summer off. Yeah.
Summer for some.
Yeah. Oh, yeah.
Winter for other. I prefer the winter, I've got to tell you. It's far better on me. Anyway, we'll call it quits, shall we? Thank you, John.
No problem.
Thank you, Marlon. And thank you for being our trading buddies, everyone. Mate, wish I was going to see you guys in Singapore next week, but that's not the case. But I'll be talking to you nonetheless, and have a great time over there. Enjoy the camaraderie, and certainly the lessons that we'll pick up along the way. And I'm not just talking about the clients. Every time that we have one of these trading retreats, I think every single trader walks away with something that they didn't have before. So it's a great opportunity to listen and learn. It's full on, I've got to tell you. This one's only 2 days, but the next one, planned to be live, will be, as usual, a whole week of putting stuff into your head. My God, it's a big thing, isn't it? The trading.
Oh, that'd be amazing, mate. That'll be in Bali.
Yeah.
Hopefully.
Yep.
Thanks, Paul.
Fingers crossed. Righto, guys. Let's do it. Thank you again to everyone for being our trading buddies, and we'll catch up with you not next week, but the week after. Have a wonderful week and a bit, and we'll see you then.